Hold on to your hats, folks, because Trump's back with tax cuts and deregulation promise, and the stock market is throwing a rave. The excitement is palpable, and the energy on the trading floor is electric. It's like Wall Street is hosting the biggest party of the decade. The Dow Jones is doing the Macarena, shaking off any doubts and dancing its way to new heights. The S&P 500 is breakdancing, spinning, and twirling as it climbs higher and higher. And the Nasdaq is, well, the Nasdaq is just being the Nasdaq, consistently pushing the boundaries and setting new records. Trump's promising to slash corporate taxes again, and businesses are practically bathing in champagne. The corporate world is buzzing with excitement, envisioning the windfall that these tax cuts could bring. Less tax means more money for them, right? It's like Christmas came early for corporate America. And what do companies do with more money? Buy back their own stock, of course. This move not only boosts their stock prices, but also makes shareholders very happy. Producers will not invest in fresh capex until they anticipate much higher demand, sustainable in the longer term. It's the circle of market life. Companies get more money, buy back stock, and the market keeps on spinning. Meanwhile, over in the land of commodities, gold and oil are having a bit of a meltdown. Prices are dropping faster than a lead balloon. Apparently, rumors of peace talks in Gaza and Ukraine have got investors feeling all warm and fuzzy. The prospect of peace is making safe haven assets like gold less attractive. Who needs safe haven assets like gold when everyone's holding hands and singing Kumbaya? It's a new era of optimism and hope. But let's not get ahead of ourselves. The market is a fickle beast, and today's euphoria could be tomorrow's hangover. Is this market euphoria just a sugar rush, or is Trump's tax cut 2.0 the real deal? Only time will tell if these tax cuts will have a lasting impact, or if they're just a temporary boost. Grab your Pepto-Bismol, folks, because we're diving deep into the economic rabbit hole. We're about to explore the potential long-term effects of these tax cuts and what they mean for the future of the market. Buckle up, it's going to be a wild ride. Remember that time Trump slashed corporate taxes back in 2017? It was a game changer for many businesses, leading to a surge in stock prices and corporate profits. Yeah, well, he's back for round two. This time, the stakes are even higher. This time, he's promising even bigger cuts, which has corporations doing the happy dance all the way to the bank. Imagine the excitement in boardrooms across the country. Lower taxes mean more profits, and more profits mean higher stock prices. It's a simple equation that investors love. It's basic math, people. Plus, companies are more likely to invest and hire when they're feeling flush with cash. This could mean more jobs and opportunities for everyone. At least, that's the theory. Of course, not everyone's convinced. There are always skeptics who question the long-term benefits. Some critics argue that these tax cuts will only benefit the wealthy and do little to boost the economy. They worry about increasing inequality and the burden on the middle class. They say it's like giving a billionaire a free yacht while the rest of us fight over scraps. The disparity is hard to ignore. Ouch. But hey, who needs facts when we've got stock market gains, right? For now, the markets are riding high and investors are celebrating. Remember when gold was the hottest thing since sliced bread? It seemed like everyone was jumping on the gold bandwagon, convinced it was the ultimate safe haven. Those were the good old days, when the world was falling apart and the financial markets were in turmoil. People were desperate for something stable, and everyone was hoarding precious metals like they were going out of style. Gold coins, gold bars, gold jewelry, you name it, they wanted it. Well, those days seem to be over. Gold prices have been on a downward spiral lately, and it's not looking good for those who invested heavily in it. And it's all thanks to those pesky peace talks in Gaza and Ukraine. Who would have thought that peace could have such a dramatic impact on the markets? Apparently, the prospect of peace and stability is bad news for gold bugs. Investors are now looking elsewhere, and the demand for gold is plummeting. Oil prices are feeling the pinch too. Less geopolitical uncertainty means less demand for oil, which translates to lower prices at the pump. It's simple economics, really. When there's less fear of conflict, there's less need to stockpile resources like oil and gold. Or maybe it's all part of a grand conspiracy orchestrated by lizard people. Who knows these days? Theories abound, but the facts remain elusive. Either way, if you're looking to invest in commodities, now might not be the best time. The market is unpredictable, and traditional safe havens are no longer as safe, unless you're really into tin. Tin is having a moment. Its prices are on the rise, and it might just be the next big thing in the commodities market. So, keep an eye on tin. It could be your next golden opportunity. Let's be honest, folks. The world is a complicated place, and sometimes it feels like there are unseen forces pulling the strings behind the scenes. Some call them the deep state, others call them the military-industrial complex. Whatever you call them, there's no denying that powerful interests often shape foreign policy and military actions. And when it comes to war and peace, there's a lot of money to be made. So, are these peace talks in Gaza and Ukraine a genuine attempt to end conflict? Or are they just a ploy by the powers that be to manipulate markets and line their own pockets? The truth is out there, people, but you'll probably have to go through a lot of red tape to find. For more, you may visit my Twitter ID, AshishGhostJPG.